What's going on, guys? It's Bandit FX, and today is June 29th, 2021. And today we're going to be covering a trade recap for GJ sells from this morning during the New York session. All right, so if you take a look at the chart right here, this is exactly how we had the chart labeled from this morning. I'm going to go ahead and pull up the New York analysis before it actually happened so you guys actually get an idea of what we were looking at when we came onto the charts. So I'm going to go ahead and copy the link real quick. And okay, so this was the chart right here. June 29th, 2021, 6:45 in the morning Eastern time. So we had price basically in a range. We came down, created a low, created a high, and now price was coming back down to retest that low. So what we were looking for are sells below 153.030 or buys above 153.250 with both of our take profit locations marked out. So I actually took two trades. I'm going to go ahead and delete the buys because we didn't take buys today. I'm just going to clean this chart up a little bit so you guys can see a little bit better. Okay, so price was ranging, whatever. We're coming down now to this level. We were basically looking for sells below 153.030, which basically was once we broke this low. Now, what's important about this is we're looking at the 30-minute time frame right now. So it looks like price came down hard. We had a big retracement, and then price started to continue down. I actually took my first entry about a minute before the 1 hour candle close, and I will tell you why. So um, it was basically this hour candle right here, the 6 o'clock candle, 6 to 7 o'clock Eastern time. We had this candle come down, and this was a confirmation for an impulse entry. You know, we had a bearish candle form, a bullish candle form that did not break the high of the previous candle, and then this candle created its top wick, came down bearish. As soon as we broke the low, even though it was in the last minute, this was a confirmation for an impulse entry. So I took my first entry. When I did take my entry, I saw price was coming back up and closed back in the range. Once price did close back here in the range and we got this little push down, I closed my first position for a 1 pip loss. And the reason that I did that is because price did not close below this low. Even though we had the impulse entry confirmation, we had it, but then the candle closed later in that minute and, didn't close with a lower close than this previous bullish candle that you could see on the 1 hour time frame. So this close is actually higher than the open of the bullish candle. So, I wasn't too confident. I took the 1 pip loss, and at this point I'm going to go ahead and show you guys basically where my stop loss was. So we took the entry once we broke. My stop loss was above the previous 30-minute candle. Or the current at the time 30-minute candle, which was right here, and we were looking for the full take profit target. Now, let's take a look at this. We have a 20 pip stop. We're trying to catch what is this? 25 pips. Oh, I'm sorry, 25 pips, and we had a risk reward ratio of 1.25. Now, this is where it gets interesting because I use a percentage based risk, meaning I use the same percentage every time. I do not use a fixed lot size when I trade. So regardless whether my stop loss is 20 pips or 5 pips, I'm still risking that same percentage, which in this case, I was risking 1%. So with a 1% risk, whether my stop loss is here or here, that's still a 1% loss. So what I did was, with a stop loss of 20 pips, like I said before, right above this previous candle, when we did close, I took that 1 pip loss, which was basically nothing, just the cost of spreads, and then 1 pip, which was almost negligibly nothing. It was a break-even trade. And then what I did was I gave my trade a second chance. Now, when did I give my trade a second chance? On this next 5-minute candle. So I'm going to show you guys here, or 15-minute candle rather, sorry. So taking a look here, this was the 6:45 to 7 o'clock basically close. Actually, it was a 5-minute candle. Okay, so this was the 6:55 to 7 o'clock candle. This was the opening candle for the next hour. Now, when I took my second entry, was once this 5-minute candle came and broke the low of the previous. This was my confirmation for the second entry. Now, what's interesting about this is I had a much tighter stop loss because of the time frame that my entry was based upon, and that we already had broken the low. I had took this entry, once we broke the low right here, with a 5 pip stop loss. So this was my second entry. My full take profit was here. It was looking at a 4R trade. This was a very tight stop loss. And the reason I was able to get away with this is because it was a new hour. We broke the low. We were coming into that hourly candle that was right before the New York Open at 8 o'clock. So we had a lot of volume coming into the market. So basically what happened was price just completely melted down to this level. Obviously, when I got to, actually, I think my stop loss was 6 pips. Yeah, it was a little bit looser than that. So when I got to a 1-to-1, when I was at 6 pips or 7 pips, actually, I believe this is when I closed 75% of my position. Now I got away with catching only 7 pips, but still managing to make that 1%. And the reason that is because of the percentage based risk. So obviously my lot size is much bigger with a stop loss that's this tight. That's just one of the advantages of using a percentage based risk versus a fixed lot size. When you're using a fixed lot size, you got to kind of focus on having a really tight stop loss, and sometimes you guys can get stopped out. And the bigger your stop loss, obviously, the more risk you're putting on the table overall. With percentage base, it really doesn't matter. You kind of have more time frame flexibility, meaning if you see a setup on a 15-minute time frame or an hour time frame or a 4-hour time frame, you don't really have to worry about adjusting your lot size or doing it manually, because it is all the same. It wouldn't matter if I had a 20 pip stop loss or a 2 pip stop loss. I'm still risking 1%. The position size is just much bigger, and obviously the risk is a lot tighter, or the stop loss is tighter rather. So yeah, guys, I closed 75% here once we came down to the just a little bit over a 1R, and then I let the remaining 25% remain. Once this candle closed, I closed an additional 50% of what was remaining. So I had about 13% of the trade remaining, really nothing, a little bit over 10%. Once we had this bullish candle form, this is when I did close the full position. Now, this 5-minute bullish candle, this is something I talk about specifically with crypto, this three candle pattern right here. And I see it more often than not, even though it looks like a very weak. I'm gonna draw an arrow for you guys. Even though this candle right here looks like a very weak bullish candle that price could continue down, more often than not, if this next candle doesn't break the low of this candle, the price will actually reverse on you. And this is some people call it a morning star. The opposite is an evening star. Look at my crypto video as far as my 3 candle formation. I cover this actually a lot, and that is something that I can identify even on forex trades. And this is where I close the remainder of my position, because I'm like, hey, there's a high probability that we're gonna have a retest here. We're gonna start trending upwards on a lower time frame. So I closed the remainder of my position once I saw this candle form, and this is basically where I got out of the trade, with the remaining amount at, I believe, hold on a minute, at a total of 12 pips. So this is just about a 2R for the remainder, but we secured the majority of it, just around 1.15, I believe it was, risk reward. But yeah, guys, overall, pretty good trade. Just kind of highlights the importance of giving your trade a second chance. Because if you don't give your trade a second chance, or your bias a second chance, sometimes you don't always get that perfect entry. Sometimes you enter too early and price will retrace. But what you guys have to do is make sure you're managing risk and cutting those losses short and waiting for a better entry. There's nothing wrong with taking a loss, especially a very small loss. If you're taking a small loss in anticipation of a better entry or a better confirmation, that's totally okay, because today this played out in our favor. More often than not, it will actually, and that's because you're cutting the loss so short and giving your trade a second chance. If it does go in your favor, I had a 1 pip loss and a 12 pip winner. So obviously the good outweighs the bad. When the good doesn't outweigh the bad is when you let the runners run against you. I mean, not the runners run, but you let the losses run against you. So you got to make sure you're cutting your losses very, very quickly. That's a very, very important thing you guys need to, you know, focus on more than anything is making your losses as small as possible. Even if you're not that confident in a trade, lower the risk. You know, just lower the risk overall and make sure you're cutting those losses short. I promise if you guys cut your losses sooner rather than later, you will be more profitable than you already are if you aren't already profitable. So, um, yeah, guys, that was the trade from today on GJ. We took two sells. One was a small loss. One was a pretty decent sized winner. Let me know what you guys thought of this trade. Leave a like, leave a comment, and if you haven't already, please subscribe. Once again, I'm going to leave my Bandit FX Discord in the description. I'm going to leave the link. All you have to do is tap the link and accept the invite. We trade every New York session every morning, 6:30 a.m. Eastern Time in the Discord with a live stream running. And feel free to post your chart analysis. We review each other's analysis, things like that. Ask any questions, basically anything. So I will see you guys next time.